Good morning, VIPs. It's Friday, April 21st, and I don't have great news for you today. Don't have catalyst. Don't have any plays for you today, except maybe short Mobileye from Chris Tuttle. We'll talk about that in just 1 second. But first, let's take a look at QQQ and SPY. We have earnings next week, big cap earnings, like all of them. Google, Apple, Microsoft, the whole thing. That's all happening next week. Okay. Now ahead of that, we had Tesla, which got killed yesterday on earnings. And we have the situation with QQQ and SPY. So let's just look at QQQ first. It's on the precipice here. This 20 DMA, so important. If we close below it, I don't see what's going to stop. Let's see what it had bid before when it closed below it. Yeah, last time it closed below the 20 DMA, it did hit the next major moving average. Let's go back 6 months and see if we can find a trend. And then the time before that, when it broke it to the downside, wow, we've only had 2 examples. Yep, look at that. Here we go. Broke below the 20 DMA. Well, actually, it was a little bit of a fake. It's a few days of fake out. Ooh, that tricked people. And then it went down. Okay, so the major moving averages, not great. Tesla, we need to look at to consider this because I think Tesla could be a leading indicator of risk and macroeconomic situation, especially the macroeconomics and the commentary Elon Musk had there. So, by the way, this is below. Is it trying to get back above this level? 163.91. It's right on it. It's so funny. 163.83 now. So 163.91. I don't think it's going to happen. I don't think we're closing above 163.91. I think we're headed to that gap between 145 and 155. But more importantly, I want to get to the sentiment about the macroeconomics and the commentary Elon Musk had, combined with the chatter we've been seeing because of the banks basically calming down with the banks, that the Fed can resume being hawkish on rates. That's the theme that people are talking about. And, and I think we're kind of in a situation now, I said this the other day, where bad news is bad news, right? For so long, it's been bad news is good news is bad news. You know how it goes with the Feds and interest rates. But this time around, I think bad news is going to be bad news for the next period of time. Whether that period lasts a month, a quarter, or 2 quarters, I'm not sure. But I think there's a good chance, this is where I stand today, and I reserve the right to change my opinion every single day based on the new information that comes out. But as of today, I believe the QQQ and SPY are headed for a fundamental reprice based on earnings that are going to be coming out from the big caps. Based on people saying, oh, the economy is actually now starting to hit the earnings. We have to re-rate. We have to reprice all of these stocks and bring them back down to reality, whether that's Apple or Tesla or Google or Meta or Microsoft. I think they're all susceptible here in the next quarter or two, notwithstanding any other changes in the news flow or the economy or anything that can happen on a daily basis. But that's where I stand as of today. Now we're looking at what can be a hedge to that. I did mention the other week, TLT is starting to look like a hedge again. I forgot when I flagged this, but it was recent that I flagged the change in behavior of TLT, and I'm like, it's starting to look like this can be an effective hedge again against the markets. And this morning, it's showing that. So perhaps this is something you'd want to consider as a hedge. Another way to hedge it is like PSQ, shorting the NASDAQ, 1X. So some options there. And gold has not worked tremendously, and it's below the 20 DMA. So maybe having a mix of things like TLT, gold, PSQ might be the way to go if you want to hedge your portfolio. All right, so that's it on the macro. I'm not going to have a lot to discuss. It's going to be a short show today because there are no catalysts. Like, I have a few stocks I'll talk about, but let me just check the news feed again. And there was like literally nothing, okay, except for AUGX, which had an upgrade yesterday and another upgrade today from $4 to $5 at B. Riley. And there's another one yesterday that went from $5 to $6. I think that was actually this morning as well. So we had a couple upgrades there on AUGX. So speaking of AUGX, all 4 pillars triggered on this yesterday. I flagged it yesterday at $2 and gave you a couple targets, which hit. And I think the dips are viable on this. Are we at a 52-week high? Yeah, we hit a new 52. Actually, wow, at 343. It got resisted right at that level, 337 by about 3-4 pennies. It's amazing how these technicals work. So 337, right around there. All right, it made a new high by 6 cents. Okay, but I think at this point, you have strong resistance of $4. You see this? You see, 1, 2, 3 kept bouncing off it, then it was resistance. So a move to $4 is possible at some point in the next week or two. I think dips on this are probably buyable. So you can find those support levels. 3 is definitely a nice support level. There's another support level here about 280. So I think 3 and 280 are nice support levels to buy the dips on that. And by the way, we have a couple nice presentations on AugX when it was presented to us. If you go to youtube.com/storytrading and search within our channel, type AUGX, you can get the background info on this. But then you should definitely read the recent 3 press releases on AugX, on earnings, on the partnership and equity investment by HCA, and also on the collaboration on the AI with HCA. So 3 major news events, which I think are marking a fundamental inflection point in the stock. I shouldn't say fundamental. I should say inflection point in the stock, because the inflection is based on fundamentals, catalysts, sentiment, and technicals, all of them. All right. Tesla, I just talked about that and where I think it's headed, 145 to 155. Microsoft, let's just look at the big caps to see how susceptible we might be to a downturn either today in anticipation of earnings next week, or if earnings don't come out great. So Microsoft looking very similar to QQQ, very susceptible here. If it breaks 20 DMA, look out below, okay? It's a lot of room possibly to drop. There is some strong support at 280. Okay, I'm not going to play any of these. I'm just pointing these out in terms of what's the risk on the indices. And obviously, and unfortunately, if all the big indices go down, even your favorite stocks, no matter how good they may be, will probably go down as well. So just something to keep in mind. Alibaba broke this level, which was key. So disappointed about that, 92.06. So possibly you got to fill the gap now. And the top of that gap, let's call it 8. There's 88.38, but on that day it closed at 86. So somewhere between 86 and 88 might be in play here on Alibaba. But if we're going into that recessionary kind of repricing, fundamental repricing based on lowered earnings, which I just spoke about, assuming that Tesla's the first domino to drop, then it's easy to imagine Alibaba going towards this recent lows of $80, and then who knows, possibly even lower. Okay, so something to keep in mind. Not a fun situation we're in right now. And there's also geopolitical risk here. The tensions between the US and China, very high. And there's always been the risk of your BABA stock. Now there's multiple risks. There was always the risk that China would say, oh, these BABA, I forgot the vehicle it's called, the legal vehicle that was set up, VTEs, I think it is. I forgot. But there's always a risk that China's worth anything. You don't really own shares in Alibaba. That's part of the reason it always gets a discount. Now you got to worry at some point the United States will say, we're pulling your listing from the NASDAQ or wherever it's listed, NYSE. That's always a risk too. I don't think any of that will ever happen, but sentiment-wise, it's got to be priced in, and that's why you see the discount, and maybe discounting it further because of the recent headlines of the heightened geopolitical tensions between U.S. and China. Mobileye is really, I like this pick more than anything. Thank you, Chris Tuttle, for presenting that the other day, because we have a very strong catalyst. We have the backdrop of everything I just talked about with the NASDAQ. We also have Tesla, an EV company, and this is the EV space, Mobileye. Well, yeah, it's mostly EVs, autonomous driving. Well, I'm not sure I should say that. I think it's probably all vehicles. But anyway, in a macroeconomic downturn, and Tesla will definitely hurt the sentiment. Tesla goes towards 145 or 100 or something like that, then Mobileye is going to get hit. But then you have the macroeconomics. But the real catalyst, and you have the QQQ. But the real catalyst is lockup expiry next Thursday, I believe it is. I think earnings are Monday or Tuesday, and then lockup expiry next Thursday. And Intel owns like 95% of these shares. And I think it's a pretty good bet that they're going to be selling shares, and that could be a fun short trade. So I might even try to find some, I know I've been trying to liquidate everything to move everything to the hedge fund starting May 1st, but I might set aside a little bit of money and to do this, because I just like this thesis too much. All right. We also had the Quip thesis, which I don't like as much from Chris. I don't like it as much from a timing perspective. This is a fundamental play. It's down to a price where it's fundamentally attractive. But the problem is the timing, right? For the timing, you need a sentiment change, you need a technical break, or you need a catalyst it, to get to time it perfectly, right? Like this can move towards 650 without a catalyst, but it could take time. It could take weeks or months, and it could be dilly dallying here at $6 for a long time, and you could even get lower, right? It's possible you can first go down and then up. So Quip, maybe something for an IRA, maybe something for the long term. But if you're trying to time this, if you want to make quick money, I don't love this trade from Chris as much as I love the Mobileye short trade, again, because we have a strong catalyst for Mobileye next week. I'm going to be looking at some things in this downturn, like what could be safe. And like one example of something that could be safe is REL. I think REL, it's could be over. I think this drop could be over on REL. You have safety of the fundamentals coming into a very low PE now, like approaching. Oh, it's a 9 PE is the look at that, 8.72 is the trailing PE. So I think this is getting really cheap, and although the technicals don't look superb, you do have some support here at like 15 or so. But the reason I like this is because going into like a recession or macroeconomic downturn here potentially, their products shouldn't be impacted, like very little. We had the interview. You can find it in our app. Oh, by the way, if you're looking to replay on this, let's go put our little banner about our app. And in our app, in the community section under archives, you can see the interview we did with REL just a couple days ago, which who knows? Maybe it's possible we played a role in marking the bottom of the stock there. Maybe it was coincidence. I'm not sure. But if you take a look at that interview, I actually asked him, and I almost disagree with him. I don't know, like, why would a recession, unless it's like a depression, impact their projects, their green energy projects, with their customers are not, their end customers are not like consumers. So it's governments and it's large utilities and things like that. I have a hard time seeing any kind of mild or even moderate recession impacting their demand. So could be wrong. Maybe I think he was just being very conservative with us. But anyway, REL is something I kind of like into a downturn in terms of maybe selling puts or something like that. Clearfield also. Oh, it did try to reclaim that, didn't it? Oh, that's this morning. Okay, it needs to. This is key. We need to reclaim today this 200-week moving average, which it closed below. Now, I'm not sure exactly what it's at. Let's see if I can zoom in. This is a little bit imprecise, but it's about $43 or so. Okay. I'd like to see this close above $43 because technicals matter. No matter how cheap the stock is, fundamentally, technicals matter. And when you break a key technical level, and I should have respected this up here when we broke the 50-week moving average, 84 level, right? And then look, it got resisted at that 50-week moving average. It's very, very important. And by the way, the technicals can often speak to fundamentals which you're not aware of, right? Like this broke, and then they had bad earnings, and then it explained it retrospectively. Like people with big money might have a better handle on the fundamentals than we do. Okay. So, and they're looking at these levels too. And they're like, well, why should I sell the stock below the 50-week MA if the fundamentals are good? But if they know the fundamentals are bad, they're happy to sell it below the key technical levels. And that's how all this happens. So you got to look at the technicals. Very important. So this 200-week moving average is very important. I'm actually hopeful it's going to retake it again, because I think the technicals are, in some respects, a reflection of the fundamentals. And I'd like to believe that the net market opinion on the fundamentals are good enough to keep this stock above a key moving average, right? So I'm optimistic we're going to hold 43. Let me just look at what KLX ended up doing. So we have Clearfield earnings coming up. So KLX, just volatile, not much to read into that. Let me see if I can find the date of the Clearfield earnings. This is going to be something we should be aware of. Doing research. So we have not much to talk about today, so we're just going to research. Here we go. May 4th. All right. So May 4th is going to be the earnings report. So this is another one potentially I'd think about taking a risk on selling put options because it's down so low and it's at the ultimate bull channel support line. This is the ultimate bull channel support line is the 200-week moving average, okay? No level is more important than that. You stay above that level, you're still in a long-term bull channel. All right, that's about it. I talked to the XXII CEO Monday morning privately. We talked about doing another interview for the story trading community, and we both agreed that we're going to wait until they sign this deal with McLean and 7-Eleven, which we didn't name, and I didn't name those, but I know everyone knows that's what it is based on the clues they gave. But I said, when you sign your distributor and sign this big retailer, maybe we should wait till then. And he agreed on that. So I'm going to talk to him privately and share any important notes with you from that. And then Dario, we're speaking to the president of Dario, Rick Anderson, Wednesday at 4:30 p.m. exclusively in our app. So stay tuned for that. Going to have some interesting conversations and questions for him on that. MSauce trade didn't work out. I had to sell that for a loss. Nothing else really worked out. Anyway, I had to liquidate anything. The timing just was that I had to liquidate pretty much everything. The only things I'm holding onto in my trading account is XXII and some Dario because I'm hopefully expecting big catalysts in both, and I just don't want to sell at these levels. So I'm going to wait for some catalysts and then sell it at some point, hopefully in the next few months, and then move that money into the hedge fund as well when the time is right. So that's all I got for you today. Not much trade ideas today, except, hey, you might want to hedge. You might want to hedge. You might want to think about shorting Mobileye as a trade today and maybe dips on AugX. All right, that's all I got. Have a great day. Thanks for joining us. Take care.